Mr. Powell, the subcommittee chair, for 5 minutes.
Thank you. Thank you, Mr. Chairman. You know, we hear that in the future we're going to have a better economy, and everybody hopes so, but it's hard to believe. It's hard for me to believe anyway, because I look back on our past 3 years, and what Congress has done and what the Fed has done, we've literally injected about $5.3 trillion. And I don't think we got very much for it. The national debt went up $5.1 trillion. Real GDP grew less than 1%. So I don't think we've gotten a whole lot. Unemployment really hasn't recovered. We still have 7 million people that have become unemployed. And one statistic that is very glaring, if you look at the chart, is how long people are unemployed. The average time used to be 17 weeks. Now it's nearly 40 weeks they stay unemployed. So nothing there reassures me. And also, when we talk about prices, we're always reassured there's not all that much inflation, and we're told that they might start calculating inflation differently with a new CPI. Of course, we changed our CPI a few years back. There's still a free market group that calculates the CPI the old-fashioned way, and they come up with a figure, in spite of all this weak economy, the prices have gone up 35%, 9.4% every year. And I think if you just went out and talked to the average housewife, she'd probably believe the 9% rather than saying it's only 2%. So I would say what we've been doing isn't very reassuring with all this money expenditure. But my question is related to the overall policy. Spending all this money hasn't helped. And yet many allies that would endorse so much of what's been going on, whether it's the Fed or the Congress, they recognize that consumer spending is very, very important. And they concentrate on that. But the $5.1 trillion didn't go to the consumers. It went to buying bad assets. It went to bailing out banks. It went to bailing out big companies. And lo and behold, the consumer didn't end up getting this. They lost their job, and they lost their houses and mortgages, and they're still in trouble. But my question is, if you took that $5.1 trillion and said that consumer spending is good, you could have given every single person in this country $17,000. Why is it the program of both the Congress and the Fed to direct the money to the people who have been making a lot of money, instead to the people who, if you argue that the consumer needs to spend the money, I obviously don't advocate this, but I would suggest, you know, maybe it could have worked better. It couldn't have worked any worse. But what is the reason we direct it toward the banks and the big corporations, too big to fail, and we don't pay that much attention to the consumer if it's true, and I don't know if you agree with that or not, that consumer spending is an important issue?
Well, it is an important issue, Congressman. But you're mistaken in saying that the Federal Reserve has spent any money. You say $5 trillion. We have lent money. We have purchased securities. That's not buying, that's not dissipating, you know, the money. We've gotten all the money back. As an article over the weekend by Alan Sloan showed, in fact, the Fed has been a major profit center for the U.S. government. We've turned over profits in the last 2 years of $125 billion. So we are not costing any money in terms of budget deficits or anything like that. In terms of what we were trying to do, of course, the reason the Federal Reserve was founded a century ago was to try to address the problems arising from financial panics, which did, by the way, occur in an unregulated environment in the 19th century. We provided liquidity and short-term loans to help financial systems stabilize. We did that not because we particularly care about the managers or the shareholders of financial firms.
I hate to interrupt, but my time is about up. But I would like to suggest that you say it's not spending money. Well, it's money out of thin air. You put it into the market, and you hold assets, and the assets aren't, you know, they are diminishing in value when you buy up bad assets. But very quickly, if you could answer another question, because I'm curious about this. You know, the price of gold today is $1,580. The dollar during these last 3 years was devalued almost 50%. When you wake up in the morning, do you care about the price of gold?
Well, I pay attention to the price of gold, but I think it reflects a lot of things. It reflects global uncertainties. I think the reason people hold gold is as a protection against what we call tail risk, really, really bad outcomes. And to the extent that the last few years have made people more worried about the potential of a major crisis than they have gold as a protection.
Do you think gold is money?
No.
It's not money.
It's
Even if
a
it had
precious
been money
metal.
for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial
why do
asset.
central banks hold it?
Well,
if
it's a
not
form of
money?
reserves. It's a
Why
form
don't
of-
they hold diamonds?
Well, it's tradition, long-term tradition.
Some people still think it's money. I yield back. My time is up.
Hello everyone, welcome to Global Government News. Today is Friday, July 15th, 2011, and I'm Darko. www.ggnonline.com is my website. That's ggnonline.com, or ddarko2012 on YouTube. Go check out my channel. I have most of my videos there as well. I have a poll here, and you only have 4 days left to vote, and it's the biggest issue right now, or topic, in the mainstream media and in Washington. Do you believe failure to raise the debt ceiling will hurt or help the American people, not banks, in the long run? So far, 61% are saying help, and 23% are saying it will hurt the American people in the long run. 9% saying both, and 4% saying not sure. Okay, let's move on here with the economy. Basically, we have Google lifts Wall Street an otherwise rough week. And moving down here, Google's blowout quarter led the NASDAQ higher on Friday, but mounting uncertainty about the government's ability to reach a debt reduction deal may keep investors at bay in the coming weeks. Next up, we have news from China. And it says here, China stocks up 0.35% on Friday. And moving on to their currency, the yuan, it says here it weakens against the US dollar on Friday. It said here it weakens 25 basis points to 6.46 per US dollar on Friday, according to the China Foreign Exchange Trading System. Euro gains, then loses steam after a stress test. Says here European banks did better than expected in a stress test. Results released, but the euro couldn't gain any momentum due to the strain of the Eurozone debt crisis. Moving on to Treasuries, they lose momentum. Rallying a safe harbored Treasuries faded as the latest stress test results on the Eurozone banks ease some worries about the region's debt crisis. Moving on to commodities here, there's still kind of high, but just recently inching down. And it says here $117 is the Brent crude price. Gas oil futures up almost $5. Heating oil futures also up. Moving down here to agriculture, we have some mixed up here. We have cocoa up, coffee down, wheat down, and corn up almost 6. Says here copper futures $3.30 was the change. It's now at $441. And moving down here, we have gold trading at $1,590 per ounce. Silver at just below $40. Both were up 80 cents and 40 cents. Okay, so we're going to move on now to the next article here, Return of the Gold Standard as World Order Unravels. And it says here, as the twin pillars of the international monetary system threaten to come tumbling down in unison, it says gold has reclaimed its ancient status as the anchor of stability. The spot price surged to an all-time high of $15.94 an ounce in London, lifting silver to $39. Moving on here to gold, also get some backstory. Gold rises on debt talks, and it says stocks are up slightly. Moving down here, it says concerns about the government's ability to avoid a default boosted gold for a 10th straight day on Friday, while stocks rose after strong corporate earnings from companies including Google. And we'll have news on the possible stimulus coming up here. Oil rises on lower Canadian supply and equities. It says here oil rose on Friday on lower supplies for a Canadian export pipeline. Wall Street's advance on favorable results of a stress test on the European banks. Okay, oil drop pushes consumer prices lower. Inflation last month fell for the first time in a year as prices for gasoline and other energy-related products continued to decline. So we have up next, gloomy consumers cast dark cloud over the economy. U.S. consumer confidence is at a 2.5-year low in early July, and manufacturing output stalled in June, further frustrating expectations of a quick economic growth rebound in the second half of this year. Australian news, just waiting on my computer here. All of a sudden it's got really, really slow. Australian retail slows as shoppers scrimp. Frugal shoppers are shunning department stores, hardware shops, and cinemas, creating a retailing slowdown as they strip their spending back to basics. Investors punished the retail sector yesterday after David Jones forecast a 20% fall in profit over the next 6 months. The Australian reports. Then moving on to energy prices, they rose and put a fifth of households in fuel poverty. So you can go in there and check that out. 1 million extra households have been pushed into fuel poverty in the space of just a year as rising prices cripple family budgets. The rise leaves almost a fifth of households in the UK in fuel poverty, the point at which at least 10% of a household income is spent on heating. Next up, we have news on the carbon tax. It means $300 power bill surge, says the New South Wales Treasury. And it says here we need a carbon tax like a hole in the head. And it says here they're going to more than double what the federal government has claimed, adding as much as 300 Australian dollars to the average family's yearly bills, according to forecasts by New South Wales Treasury officials. Moving on here, U.S. jobless claims fall to a new low. It says here, but they still remain very high, and the country's weak labor market official data shows. More news on unemployment. Move up here. Greenspan, dumb Americans deserve unemployment, and it says the former boss of the Fed, Alan Greenspan, said the reason Gen Xers are unemployed and suffering from a lower standard of living is because they are lazy, stupid, and unproductive. U.S. companies would be better off hiring immigrants. And he basically goes on here. You can read the actual quote that I guess you could say our generation. I don't really like to say our generation. I'm an individual, and I don't want to be homogenized into any group. But they're saying Generation Xers are lazy, and basically they're not as good slaves as the baby boomers, who are just been slaving away like the gerbil and little wheel, and they're not even going to get anything in the end. They'll be lucky to get Social Security or their pensions. So just keep slaving away, Generation Xers. It says here 670 co-op finance jobs to go. That's out of the UK. Then looking on the manufacturing, the gauge slumps as core inflation gains. U.S. consumer prices fell slightly more than expected in June, but it goes on here to say that their biggest drop in a year on weak gasoline costs, but underlying inflation pressures remain elevated. Then New York's manufacturing unexpectedly shrinks for the second straight month. And then moving on to interest rates here, it says that interest rates are set to plunge, Westpac says, and one of the big four banks expects the Reserve Bank will soon slash interest rates, while some of Australia's most prominent businessmen have warned that the European debt crisis and struggling Australian households are slamming the economy into reverse. Next up is our middle class. Middle classes are Britain's new homeless state. Safety nets are gone. So we're talking about poverty. It says that as the downturn bites, the numbers turning to local authorities for housing are rising, but there is little help to be found. And it says here that's all your taxes went towards that. No, it went towards basically banks and like subsidies and stuff like that. It says here, fraud. Britain facing a $43 billion hit if the Italian economy collapses. So they're just, kind of threatening people now. And that's what globalization is all about. I mentioned this before, about getting all these countries all intertwined so that if one doesn't want to, if a sovereign nation doesn't want to do something, I'm not saying that they're a sovereign nation anymore, but if they did, they're going to be goat roped and say, oh, well, if you don't do this, other countries are going to suffer. EU budget plan, this is like the bailout and the stimulus in the U.S. They said that EU budget plan may see 1% value added tax hike. Italy's Senate approves budget cuts. Then next up, we have 8 European banks flunk stress tests. We've already covered that. 1,000 people protest Lisbon's austerity plans, talking about in Portugal. Then Bernanke says uncertain about economic developments, backtracking from the QE3 stimulus. He dashes hopes for the U.S. stimulus. I don't know who was really hoping for it. Maybe the banks, because that's where it's going to go towards. U.S. looks set to lose AAA rating. Obama, Americans back me on debt deal. Then look at this. It says here, few Americans fear economic catastrophe if debt ceiling is not raised. So no, they're not with you, Mr. President. Raising debt ceiling worsens the economy, says a professor of economics in Minnesota. Shutdown to end soon. It says here that what happened to the $2.6 trillion Social Security Trust Fund? Well, just watch that Wayne Paul segment where he's being interviewed, and he basically breaks down what Social Security was created for. 20 years after the 1913 Federal Reserve Act basically put the United States government into bankruptcy. They filed for bankruptcy, and they put every single citizen that was not even born yet as basically collateral, and that's why we pay Social Security. So it makes sense that it's not there. The world says China will overtake America, then China and EU to seek buy. Please join me in part 2. This is GGN, and I'm Darko. Thank you.